Welcome to the show, Dr. Lamba, and looking forward to hearing your thoughts on romancing the stock. So it's over to you.
Thank you. Thank you, Gautam. A pleasure to be here. And wonderful that Aditya Birla, Sun Life, and Hindustan Times have organized this Nivesh Mahakumbh 2023. Honored to be a part of a speaker at this event. As you correctly said, investing in stocks is something, if this event helps inspire some people become investors, I think the purpose would have been served, because I've said on numerous occasions on many platforms that, in my opinion, investing in stocks is a national duty. Now, sometimes people get surprised with this statement. What do you mean it's a national duty? So, folks, we need to understand what is the role of a stock market. Let's say I am one of those budding startup entrepreneurs. I have a wonderful idea that can change the world. I have great idea, but I don't have the money, and you have the money. So let's say I come to you guys and I say, why don't you invest in my idea? My idea, your money, together, we'll make it a big success and all of us will become very rich. Guys, invest your money with me and I will return your money multiplied manyfold 25 years from today. How many of you would be interested in investing? Chances are you would not be, because what will put you off is what, Anil, you will return it 25 years later. You may say, I have the money now, but I might need it next year, the year after. But now imagine I come to you, I tell you I have this brilliant idea. If you invest with me, we can all become rich. And guys, whenever you want this money back, I will give it to you. Wouldn't you be far more inclined towards investing? This is what the stock market does. It gives you an exit route. You invest your money when you have it. Whenever you want it back, pick up the phone, tell the broker, sell my shares. You may get a little more, a little less, but bulk of it will come back. But now imagine you call up your broker and you say, please sell my shares, and the broker goes to the market but doesn't find a buyer. The whole logic goes out of the window. Folks, when a large invest in shares, when large percentage of people are trading on stocks, that place, the stock market, is teeming with activity. When the stock market is teeming with activity, every time somebody wants to buy, you will find a seller. Every time somebody wants to sell, he will find a buyer. When buyers and sellers find it easier to locate each other, more people are encouraged to invest. When more people find it attractive to invest, more entrepreneurs are born. Those wonderful people brimming with ideas. When more entrepreneurs are born because they find it easier to raise money, more industry happens, more employment happens, more GDP happens, more tax collection happens, the whole nation prospers. And where did this thing start? Because you and I said, we're going to be investing in stocks. India still has a long way to go. The percentage of investors in India is way below what many developed countries have. I'm told in developed countries, the percentage is as high as 1 out of 2 people are stock market investors. In India, we are not even 1 in 20. So, folks, in order to be successful stock market investors, what do you need to understand? Just two things. You got to understand what, and you got to understand when. What obviously refers to what should you buy, and when refers to when should you buy and when should you sell. The what portion depends on your ability to do what is known as fundamental analysis, and the when depends upon technical analysis. So today, the time allotted is very short. So I thought, let me spend some time trying to give you a shortcut into how to choose a fundamentally strong share. Half your job is done when you've chosen a share which is fundamentally sound. Other half, of course, depends upon your ability to time your entry and exit. So, folks, how do you choose a share, a stock which is fundamentally strong? Now, I've always felt don't choose the company first. Always first choose the industry. A little reading of the newspapers, a little skimming of the headlines, watching the budget, the finance minister presenting the budget, will give you a fair idea about which industry has a relatively encouraging future. Once you choose the right industry, perhaps infrastructure, perhaps pharmaceutical, perhaps automobiles, whichever you feel like, do some study and you'll be able to identify the industry which has a healthy future. The next question is now, within that industry, which companies share to buy? Now, here is where your ability to do fundamental analysis comes in. So, I'm going to give you a few criteria. Apply that criteria that will help you choose which share not to buy. And by default, you'll be able to zero in on the share to invest in. My suggestion is, guys, in the beginning, don't go into shares about which you never heard of. Stick to the companies whose names come readily to mind the moment you think of the industry. Today, I'll refrain from naming names, but let's say you decided I'll go into the pharma sector. The top 5-6 names that come to mind, stick to those. Don't go to the unknowns for various reasons. Now, within those 5-6 shares, which one to choose? Here is where I give you some criteria. Folks, a little study, look at the papers, magazines, or multiple internet sites are there where you'll get all this data classified industry-wise. So if you decided to invest in the pharma sector, then go and choose the companies within the pharma sector. And the information will be available to you in a columnar fashion. They will give you data about the name of the company for the year ending so-and-so, what kind of sales did it have, what kind of gross profit did it have, what kind of net profit did it have, what is the earnings per share, and what is the price to earnings ratio, and a few more things. Now, I suggest first look at the turnover column and go a little backward. If right now you're reading this information, right now we happen to be in the month of June, so chances are you have access to data for the year ending 31st March 2023. Little backward, if you go, you'll get for the quarter ending December, as well as the quarter ending September and June, and for the previous year ending. And plot a sales graph. Criteria number 1, make up your mind, I will not buy the shares unless the sales graph is looking to the sky. Folks, there are thousands of companies to choose from. Why would you want to go out of your way and buy the shares of a company whose sales has either started stagnating or started dropping? So make up your mind. First criteria, fundamentally strong share, is the sales should be continuously rising. Then move to the next column. Gross profit. What is gross profit, folks? From your sales, if you deduct the direct expenses, you arrive at gross profit. And direct expenses, by and large, the nature is they are variable. What does variable mean? If sales, for example, goes up 20%, the variable cost will also go up 20%, and the gross profit should also go up 20%. So criteria number 2, plot a gross profit graph. And I think the gross profit graph should be at least parallel to the sales graph. If it is improving at a faster pace, it's a huge brownie point. And if gross profit is growing at a pace lower than the increase in sales, it's a complete no-no. So first criteria, sales should be up. Number 2, gross profit should be up at least at the same pace as the increase in sales. Now go to the third column, net profit. What should happen to net profit? From sales, if you minus the direct expenses, you get gross profit. From gross profit, if you minus the indirect expenses. Guys, indirect expenses to a large extent are also fixed in nature. Rent is an indirect expense. If your sales turnover goes up, the rent doesn't go up. The salaries will not go up. Many other costs will not go up. So if sales has, for example, gone up 20%, variable cost will go up 20%, gross profit will go up 20%, but some cost, indirect costs will go up, others won't go up. So profit should be rising at faster than 20%, net profit. So sales graph rising, gross profit parallel to the sales graph, net profit graph should be converging toward the sales graph. If these things are not happening, don't buy the shares. 2 minutes more. Number 4, look at the earnings per share. You know, in all this information, you get company-wise data, classified industry-wise. At the bottom, they give you industry average. Look at the earnings per share, then make sure that the earnings per share are higher than industry average. Any company whose EPS is not as per industry average, you decide I will not buy. What are these 4 criteria helping you to do? They're helping you to choose a fundamentally strong share. Sales is up, gross profit is up, net profit is up, earnings per share is higher than industry average. But do you really want to buy this share? Because it may be very expensive. I am not interested in buying a good share alone. I want to buy a share where I can make profit. And therefore, the 5th criteria, price to earnings ratio. Make sure the price to earning ratio is below the industry average. First 4 criteria will help you choose a fundamentally strong share. The last criteria will ensure you don't land up paying a very heavy price. Guys, if any share meets this criteria, I think you've got a winner.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.